All right, guys, in this class, this is going to be covering how to principles for improving your entries. Okay, when I say entry, I mean when you enter a trade, when you hit the button and you say, I'm going long right now. Whether you market order or you limit order or whatever, I usually market order my trades, and so whenever the order is executed, that's the entrance into the market. And so the where you enter into the market is really critical. Too often I have experienced that I'll say, well, my bias, I think this wave is going to go up, and somebody will just automatically just assume, oh, it's going up, and so they just enter the trade, right in the middle of the wave with no care about where they're entering, why they're entering, how they're entering. Just they just enter the trade, and I know maybe some of you don't think about where you're entering in the trade, but where you enter will determine your psychological experience of a particular trade. Okay, for instance, let's just say um, let's just say you decide, hey, I think this way when you were in this wave here, and you say, oh, I think it's going short. Okay, right? And so you're just like, I think it's going, and you just arbitrarily enter. Let's just say your entry was, I don't know, right here, right there. You saw it start to go down. You just arbitrarily enter. So here's your entry point right here. So let's put a little box right there. Let's talk about your experience. Okay, as that now as it was going down, it was looking good, and you went short, and then all of a sudden it goes against you quite a bit. In fact, that's almost $800. It goes against you in Bitcoin, but you hold it, because whatever, right? You hold that position, but you're really nervous because it's going up on you, and then all of a sudden it's coming back to you, but it comes back to your position, and you're like, how are you feeling as it comes down? Oh, you're feeling a little pretty good. Yeah, oh, yeah, it's coming my way. My short's really well, and then all of a sudden it bounces off of your entry, and it shoots up really fast, and now you're freaking out. But let's just say you hold your trade. You just hold your trade. It starts to come down. You feel pretty good. Every time it goes up, you don't feel so good. Now it's coming down. Oh, I'm in profit. This is great. Everything's great. And then all of a sudden, no, I'm out of profit. And all this. So what's going to happen is if you enter in the wrong place, you're going to end up just being yo-yoed by the market. Okay, you're just gonna be just kind of constantly, you know, just pulled here and there because you're experiencing your trade in light of the profit or the loss that you're looking at on the screen. Okay, so what we want to do is try to, when we enter our trades, do our very best to catch key pivot points. Okay, to catch key pivot points. So ideally, we want to catch this guy down here somewhere. Okay, why? Because as it goes up, you're feeling really good. If it comes back to you, as long as it doesn't hit your position, you're feeling okay. You can hold that trade, right? But you're in a better position to hold the trade. Let's just put it that way. Um, for as long as it needs to be held in order for that trade to pay out as it should. But what I'm saying is you want to try to hit key pivot points so that your psychological experience, all this was just up. Really? I mean that's all that was. Even if you got in right here at the bottom of this wave, right? Up. There was no yo-yo emotional roller coaster there. If you got in here at the bottom of this area right there, that's just up. So every pivot point you can catch, even if you just caught that one, it was just up until it came back to you, right? Every wave is going to finish and whatever. So as this one went down, the key entries, the places you want to be entering, are in this zone right here, right? You want to catch that top. You want to catch that top there, but you don't want to just enter in the middle of a wave. Why? Because there's going to be down, then up, and then down, and then up, and it's just you're going to be on an emotional roller coaster. And let me ask you a question. When your emotions are raging and screwing you up, how good of a trader are you? How likely are you to let go of your position when your emotions are flying?
Depends. Sometimes when you're trying to chase it, you let it go way too long before cutting it. Then other times your state of mind gets all whacked out on what you're doing as you're waiting through it.
Exactly. So both happen, right? So bad entries then create a bad trading experience, okay? And so what we want to do is I want to give you some principles to apply to your trading that if you're not doing, you need to start doing. Applying it to your entry strategy so that you can minimize that drawdown period. You can minimize the time in which you're waiting for a trade to go positive on you, because listen, it's almost impossible to catch the bottoms and the tops perfectly all the time, right? It's just really hard. We're gonna expect some kind of a drawdown, some kind of a, hey, we missed the bottom, this isn't it, kind of, time. But I want to just give you some ideas to be thinking about. So you can improve your entry. So that's the purpose of this class, okay? And there's so much here, and I had 7 principles, and I thought, well, that's a good one too. And then I've got like 8 or 9 of them now, so I don't know how many principles I'm going to share with you, but I'm just going to start, and I'm going to go for 20-30 minutes, and then we'll come back tomorrow and we'll add some to it, unless you guys are feeling froggy and you want to keep going, okay? So you guys let me know how you're processing the information, and if you think we should cut the video and then continue on. So with that said, that's the plan. So let's jump in. Okay. So what we want to do, we're trying to catch these bottoms and tops of the bottoms, the bottoms of pivots or the tops of pivots, depending on whether the market's going up or down. So it would behoove you then, the best. Let me ask you a question. As this trade was going up, would it have been better to take shorts or longs in this particular trade here? And how would you determine whether the longs or shorts would have been better? Okay. What would have been better for you to take? This short or that long? Or that long?
The longs, because the wave structure is moving up.
Yeah, the waves are going up, and they're going up impulsively. They go up fast. They pay out quick. But the down waves, what do? They kind of take forever and meander, right? They just take forever and meander. Okay? They pay out slow. You got to wait for the payment, right? But if you're trading with the trend, oh man, they go up fast and they pay quickly, right? Slow meander correction, and not very small, and very small moves, right? Then you get a big move, small. And part of the problem is that we're often trading against the trend, and we're thinking backwards, right? One of the things people do is that as a trade this is going up, right? This is going up. You say, oh, I missed the up move. So what are they thinking immediately? Usually they're thinking, oh, I'll catch the short, because the next move is going to be down. But I want to encourage you to actually think differently, okay, than that. If the first move off the bottom, and oh, it reversed on me and I missed it. Okay, you shouldn't be thinking, I'll catch the short. What should you be thinking? I'll wait for the short to finish. And once I see signs of that 3 waves finished, okay, with divergence and all the things that we look for, then I'll take the next long. So part of the problem is that we often have bad entries is because we're trading in the wrong direction. Okay, we'll try to trade a correction. We'll try to trade like a corrective wave, and it doesn't correct as deeply as we think so, or whatever, and we end up waiting for profit that never comes, or whatever. So the first thing is you need to make sure when you're thinking of trading to have a successful trade and a good entry is make sure you're trading with the trend, not against it. Okay. So how can you, what are some ways you can, and this leads you to, well, how do I know what the trend is? And that leads you to the kind of a next thought. Well, if you go to the hourly chart, guys, it kind of lets you, the where you are, on the RSI kind of lets you know the trend. Let me explain to you just kind of where you are. Every wave generally begins with a little bit of divergence, okay, and then it'll oscillate down on the 1 hour chart. Notice, like right here, for instance, this right here was the top of the RSI, but it wasn't the top of the wave, okay. But the next wave gave you divergence right here. Okay, you see that divergence? That divergence is letting you know that now the trend is about to change directions. So once you see that divergence, your mind ought to all be, okay, I need to be now trading short. I need to be looking for shorts. And you'll notice that the shorts paid out better than the longs did here in this wave. Okay, the shorts paid out better. Okay, and then what happened is this oscillated down and it got to be overbought, right? But the first hit generally isn't the hit. It's usually the second hit. You see how right here we're not overbought but oversold. See how we hit right here on this wave? The RSI came up and came back down. Price came back down, made another low right there. So now we have the divergence. That's letting you know, okay, we're now changing our thinking to the upward side. So now I'm thinking long is my next wave until I see the next divergence, okay, on the 1 hour chart. Does everybody understand that? So one way to know where you are in the trend is, do you see divergence on the hourly chart? That's letting you know that the momentum is now getting ready to be shifting to the next, whichever way the divergence is pointing. So we've been going up here in Bitcoin, right? But notice what you see here. What do you see on the hourly chart? Anyone?
Sorry, come again.
That's okay. I may be talking to myself. Yeah, you see divergence right here, don't you? So this divergence is showing you that this is the end, potentially the end of a movement. The momentum is about to shift. Now, there are two types of divergence, and there's one type that's better than the other. There's what I call local divergence, and then there's what I call widespread divergence. Local divergence and widespread. Those are my words. You won't find those on the internet. That's what I call them. Okay, right here, from this peak to this peak, there are two mountaintops. That's widespread divergence. However, right here, this is just kind of more within the same mountain range, so to speak. So this is more of local divergence. So I put a lot more weight when I see this, the widespread divergence. It's letting you know that the overall move is about finished. Okay, so what this may be, for instance, what we may have going on here is a fourth wave right here. It's going to come down to this region, right? And then it's going to work its way back up to create another high. This is going to work its way down, and then but it's not going to make another high, and it's going to create widespread divergence. So anyway, you might look for widespread divergence. That's the better type, and that's really letting you know the momentum has shifted, and so. To the downside here, and then we're going to shift our attention and look for shorts, okay, on this wave until we see the divergence at the bottom, if it gives it to us, and then we're looking for longs. Okay. All right. So the first thing, very first principle for just entering the right trade, to have a good trading experience and having a better entry, is you got to know which direction you're trading. Okay, you don't just trade every wave. Okay, that's one of the reasons why you guys lose a lot, is because you're trading against the trend. Trade with the trend and you'll have more success. Now I trade a lot of the waves. I'll trade small waves and big waves because I trade a 5 minute time frame a lot of times. But if you'll just kind of stay on the 1 hour chart for your macro analysis on which direction the wave is going, you'll do a lot better. Okay, especially when you're in the middle of this oscillating area like this. That's really a good principle there. So use the RSI to help you know where you are, what kind of wave you're looking for, to be longing or shorting. Okay, so the first principle is we need to be trading with the current wave. It could be going long or short. It might be a larger corrective wave or a larger impulse wave. It doesn't matter. But the point is, you want to be going with the RSI. You want to be trading with the RSI, not trying to trade against it. But it needs to be on the higher time frame. Even if you're trading a smaller time frame, you want to know where you are on the higher time frame so you know what kind of trade you're looking for. So right now, I'm kind of waiting for this top of this wave to be put in. I'm guessing that we're probably going to get one more high like this. Break this high maybe, and then we're going to get a corrective wave down, some kind of a corrective wave, before we go up. That's a guess of mine based on the RSI, the way I'm seeing this thing could give me a corrective wave. Now I'm aware of that, so I don't have a lot of clarity right now as to what exactly it's doing. So, but my bias is shifting from long here to I want to be looking potentially for a short, but we're at the top of a wave, so I'm a little cautious. But rule number one, try your best to be trading with the trend, and there's one strategy for doing that. There's a simpler strategy, but to me it's not as effective. You can simply put a moving average on your chart, and let it be the 200. The white one here is the 200 moving average. Okay, on the hourly chart. Now this is where in these oscillating areas it's more difficult. But when price is above Above the 200, you're looking for longs. When it's below the 200, you're looking for shorts. Now, there's some problems with that because it's not always that cut and dry. That's why I prefer the RSI method. But that's what some people do. I just offer that to you as something that you might consider. All right, any questions about principle number one, trading with the trend? The reason why you want to trade with the trend because that's the momentum of the market. You're going with the market. So if your entry is not so great, you won't have a long drawdown waiting for it because the market wants to go that way anyway. So if you know which way the market's going, you can trade with the market, and your drawdown won't be as much. There's principle number one. You guys ought to be taking notes on this stuff. This is gold. What I'm giving you. This is this is coming from years of trading, and if you'll apply these rules to yourself, you'll actually do very, very well. I got Heavens responding. Anybody else here actively listening? It would help me in my psychology as I'm teaching.
Yeah, I'm listening here, Jim.
All right, hey Jay. All right, good. Thanks, Jay.
Yeah, Jim. I'm here with you.
All right, awesome. Thanks, Jay. Thanks, Gary. All right, number two. Then that just helps me as a teacher know that I've got people listening. All right, number two. Very, very simple principle here. Very, very simple. Make sure that you're going to have the best experience in long-term trading when the RSI, well, long-term and short-term, but whatever time frame you're trading, you want to make sure that not only are you trading with the trend, but also, or with the current wave, let me say it that way, but also you want to enter your trades after an oversold condition, okay? Because after a wave becomes oversold, okay, it's not long. It doesn't take long before that trade becomes good, okay? Even if you enter early, okay? Even if you enter early, as long as you can wait it out, and another principle, and you apply another principle that I haven't shared yet, and that's making sure your entries are small enough at the beginning of the trade. And we'll talk about that in a moment. But even if you're early and you can wait it out, you're going to get the move you want to see. Let me show you what I mean. If you'll just wait for it to be oversold or overbought before you enter, it'll just improve your entry tremendously. Let me show you. Just right here. Here's the first peak into this is oversold, right? Right here. So let's just say you entered right here at the bottom of this wave, okay? And you went long. Well, number one, what's your experience right now? How are you feeling at the bottom of this wave as this green wave is going up? What's your emotional experience there as this wave is now going up?
You said we entered long.
Yes,
Where?
yeah. Did I say short? I meant you entered long right here because this is the first. This got oversold, so I'm thinking, okay, I'm going to go long now because we're oversold. So, and again, it's not the best. This isn't the best entry, but I'm just saying that what if that was your idea? Hey, we got oversold there, and you entered right here at the bottom of that wave.
I'd be very happy for a very short period of time.
Well, you'd be this is the hourly chart. You'd be happy for 2 hours. Okay, right? And once you start it, once it comes back to you, once it goes up that high, you have a chance to stop that if it comes back, right? So my point is that when price gets to the oversold and dips below 30, guys, generally speaking, we get bounces there, and that's not a horrible place to enter a trade when a move gets to below 30 on the RSI line. Okay, you're going to at least get a bounce. It may not be the bottom, but wait for that. So in other words, if you want to improve your entry, wait, be patient, and let the chart get oversold. Okay, and I'm going to add other principles to that, but let's just say that I would say secondarily, wait for there to be the second hit after oversold. In other words, you're waiting for not just oversold, but you're waiting for the rehit, the second hit. So you'll see right here on the hourly chart, we had one hit, it bounced. We had another hit, and it bounced again. That's the entry. This is the entry zone right here on the second hit of oversold on the hourly. And how would that trade have gone for you? We've gone really well. So, to improve your entries on trades, you must add a rule to yourself. I will not enter a trade until it's oversold, but even then you get too antsy. Wait for the second hit. If you wait for the second hit, that's generally the time to enter. It's not always because sometimes there'll be a third hit. That happens, but that's more rare. Okay, let's just walk through this chart and just look that every time there's oversold or overbought, and let's look for the second hit, not the first hit, the second hit. That means, and there's another principle I'm going to be teaching, that means you need to be patient, which is another principle I'll be teaching here shortly for a lot of reasons. So let's just go through. This is the hourly chart, guys. You want to trade and swing trade the hourly chart? You could trade the RSI. Look what happened here. Okay, price came up. It hit. Now, it didn't get oversold, but it hit it. Okay, it came down. It hit it again. Okay, you might say that second hit might be a decent entry. That puts you in right up here at the top of this wave, and you're in for short. Okay. That would have been a good trade for you. That would have been from, you could have gotten in at 39.7 and gotten out at 36.5. How about 37? $2,000 swing in Bitcoin. Okay, but you may not have gotten out on this one because this one created divergence, right? But what it did is it got you into profit. You had a comfortable trade. Even if it came back to you and you got stopped out, that's not a big deal. Okay, we're okay with getting stopped out in trades as long as we have our stops set. But what did this trade do? This was the oversold marker, and this was the second hit. Now you've got a double confirmation, plus you have divergence here. So you've got, there we go. That's what I'm really looking for. Now you take the short again. You enter that trade again. Even if you were early on this one, now you're in it again. Okay? And you have a much better experience. And there's the wave you catch. And you ride it all the way down till it oversold again. But not just the first hit. Wait it out and get the second hit. So you might have gotten out of your trade here because this was kind of the second hit there. Now that brings us to an interesting point here, that this got oversold. Now that's my signal to think about a trade, but I'm going to let it bounce and I'm going to let it come back to me. How many hours did I have to wait for that to happen? Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's a 10-hour wait for that to happen, that second hit. But once I start to get these engulfing candles to the upside, now I'm thinking, okay, I'm going long here, right? I'm going long. And you go long in this region. That's not a bad trade. It goes up, and it's going with you, right? But it does come back. You get stopped out on this one. But it comes back and hits it a third time. That's a third hit. That's triple divergence on the hourly chart. That is a massive signal to go long. So there you go. That's what you're looking for. So we got the first hit, and you might even say a local second hit. There's your entry. Boom, and you're in. Okay, so again, just applying this principle of, number one, we want to make sure we're trading with the wave, and that means what we're going to do is we're going to wait for the oversold or overbought conditions, okay? Oversold and overbought, that's going to signal the close ending of a wave. Hourly chart is fantastic for swing trading, guys. I'm also just showing you kind of an hourly chart swing trading idea here. If you'll just apply these principles to the hourly chart, you'll catch a lot of these waves, and you don't have to sit and watch the trade all day 24/7, trading the hourly chart. Okay, who's got any questions about what you've seen or heard up to this point?
Sounds good.
Principle number one, who can recite it for me?
Trade with the trend.
Big deal. And what was the so we want to trade with the trend. And what was the way I told you to kind of try to figure the trend out?
Use the RSI.
On which chart?
Hourly.
Yeah. On the hourly chart, use the RSI. Okay? You can use the 2-hour chart, and it'll smooth it out a little bit for you. right? But it won't get to the oversold and overbought conditions within this chop very much, okay? So understand that. So when you're going sideways like this on the 2-hour chart, you're not going to get the oscillation as better to touch the oversold and overbought, right? So the hourly chart gives a little bit better rendition of that. So applying this principle here, what do we have going on here? Well, we've got a hit and it's overbought. We got a second hit with divergence, right? Right here. And we got a breakdown and we got another hit. This is a really, I'm really thinking I want to go short right now. That's my trade bias right now. I want to be shorting. So I've got a red candle here. We haven't talked about it. I don't go short on red candles. What do I wait for? I wait for pullbacks. When I get the pullback, then I go short. Okay? But you can see that the trend, I think, is about to shift to the downside. Okay? We're going to get a down wave. Now, I'm not sure how big it's going to be. It might be just something like this, you know. It might just be a wave like this. We might get an up move. That's the pullback I'm looking for. And then once I get that pullback, I'm going short, guys. Don't think of that pullback just going to keep on rocking. The RSI, I don't think is going to let it. Now, it could. But I don't think unless this thing comes down a little bit more, I don't think the RSI is going to let this thing go up. But it might. But it will get stopped out. But if I get a little pullback right here on the hourly chart, and then I get signs of reversal on the smaller time frames, I'm going to take that short, okay? And if it comes back and makes a higher high on me, I just get stopped out and I'll enter short up here. But my bias in this region is I'm looking for the short. I'm not looking for the long. Why? Because I'm close to the end of a fifth wave, guys, and this divergence is telling me. This divergence is saying this is the end of the wave because you get divergence between the fourth and the fifth wave. The third and the fourth wave, excuse me. Sorry, between the third and the fifth wave. I'll get it. So that's the application of what we just shared so far. So I want to be thinking about this. I'm in take profit zone. I'm in, for my long right now, and I'm thinking maybe I'm looking for a short. So just because I say I'm looking short, do I just enter short here? Is this my short entry right now? No. That's not an entry. We don't just enter willy-nilly. All right. Number two principle. Number one, trade with the trend. Use the RSI for that. Number two, wait for what? Wait for the over condition. Oversold or overbought. But which hit? Which hit?
On the second hit.
You want to wait for the second hit, not the first hit, the second hit. Okay? The second hit on the hourly chart. And you'll notice there always was one, wasn't there? Okay, that brings me to a third and similar principle that you see in price action. So let me kind of clear this chart a little bit. Am I going too fast, going too slow? How we doing?
You doing fine, Jim?
Awesome. Is this helping anybody?
Always.
I don't know if it's always, but all right. Now, a similar principle. I want you to notice something at the tops and bottoms of waves. Let's just look here, for instance. This came up really fast and started reversing, but it hit it again before it went down. Okay, let's look at this one. This one came down really fast, backed off, hit it again. Okay, this one came down really fast, backed off, hit it one more time really quick. This one went down. This one went down. It backed off. It looked like a reversal. It hit it again. Now, I thought this was going to continue from there. It didn't. It came down and hit it a third time. That's rare, okay? But that happens. But that's rare. But my point is that what you'll notice at the tops and bottoms of waves is when you think you've reached the top, you getting oversold or overbought. That second hit in the RSI is going to be this wave right here. Okay, and so wait for, and this is the principle, wait for shenanigans. Okay, in other words, that waiting for the second hit on the RSI, another way to say that. So this isn't really a different principle. It's the same principle, but I'm going to call it a different principle. But just thinking about it in a different way. Wait for shenanigans. In other words, if you simply get a hit, if price is coming down and it's coming down fast and all of a sudden you get some green candles, don't think it's just going to start going up from there. It rarely does that. Rarely. What it usually does is it will come down, it'll back off like it's reversing, and then it'll hit it again, make a lower low. Why does it do that? Because that's the FOMO wave. That takes everybody who got in on the previous wave, on the wrong wave, they got in too early, and that gets them scared. Okay, and that gets everybody else going, oh, this thing's going to keep going, right? And it makes you feel that way. But we know that when the RSI is in the over condition, see how oversold this was? This is one of the reasons why we nailed the bottom, okay, last week, because this thing was oversold, right? And it created divergence on this hit. We were like, this is it. This is an area to go long, and we went long in this region, and that was a great long. So wait for the shenanigan wave, okay? The FOMO wave, I call it. The fifth wave. This is the fifth wave. So when you think it's reversed, wait for one more hit. Now, it's not going to keep giving you all those hits. It's just you're only going to get one more hit at the top. So like up here, you thought it reversed here, it gave you one more hit. Up here, you thought it reversed, it gave you a hit. Thought it reversed, it gave you another hit, and now it went. So this one was a double hit. You don't always get that. I would have been short on this wave, this wave here. Okay. All right, so wait for shenanigans, wait for that other hit. And you can see that on small time frames as well, like on the 5-minute, for instance. Let's just go to the 5-minute real fast. Okay, look here. You see that right there? Ooh, 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 it's big, 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 right? It's going up, right? But that's actually the sign of an end and not the sign of a beginning or going to keep going necessarily. That's actually a good sign of an end when we get those rockets like that, right? And now look at this wave. It looks like it's reversing and it keeps going. No, you're going to get another hit. We got another. Now this was just a 3-wave move back up, but you got the other hit. So, in other words, on your entry, don't look at this thing going down and say, oh, I got to get in down here, because then you're going to have to endure this. Maybe even another hit to the high, right? Wait for this to happen, okay? And then give you signs of the continuation, okay? Wait for that for your entry if you want to go short here. This is going down. Okay, all right. I want to wait for that and then go short. Now I'm just showing you how you get shenanigans on most time frames here. Like right here, this is going up, 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 up. Went up really fast. Came down. Hit it again. Came down. You think this is the reversal? Nope. Hit it again. Think that's a reversal? Nope. It hit it again. Okay, that was a triple hit there. You know, in a larger time frame, you know, that would clear that up what that is. But there's a lot of shenanigans in here, guys. Lots of shenanigans all in this range. So if your entry, now it's hard to enter in the middle of all that shenanigans, but if your entry was down here, how you feeling through all this stuff? Well, that's all right. No problem. Because on the hourly chart, we're not finished. Yeah, I got a hit to the high, but I don't have any divergence yet. But now we've got divergence, guys. So now we're thinking, okay, now things are probably going to come back to me. So I need to be thinking about profit. If you haven't taken profit, you need to be thinking about preserving your profit and maybe trading to the downside now. Okay, I have gone for 40 minutes, almost 35 minutes or so. I've got more to share, lots more to share. I've got 6 or 7 more principles. But should we break it up into another video?
Probably yes.
Okay, all right. Well, that's video 1, guys. Of improving your entries. Okay. At the end of the day, we're trying to just nail the market. We're trying to nail those bottoms and tops, and so we want to make sure we're trading with the trend. That's going to be the best trade. Okay, so trade with the trend. Use the RSI and the hourly chart to help you know where you are in that trend. Secondly, you want to wait for your entries. Make sure if a trend is moving, okay, on the hourly chart and it's in the middle of the RSI, wait for it to get oversold or overbought, and wait for the second hit, not the first hit, the second hit. That's going to give you a better trade. Okay. And then very similar to that is wait for the shenanigan wave. Okay, wait for that stop hunt. Wait for that wave that hits it again. You thought it reversed, but it hits it again. Wait for that shenanigan wave, because you're going to have a higher likelihood of success with that kind of a trade. And if you'll start implementing this analysis and you wait for these signs in the RSI, guys, you're going to be successful traders. If you're just patient, you got to be patient. So that means, guys, like right here, and here's an issue. That means, see all this stuff right here? How many hours are you not trading? If you're being patient for this or this, right? All this stuff in here, you're not. If you didn't get in up here, you're not trading this stuff on this time frame. Now you can, right? But you might just have to discipline yourself to stay out of the market for 3 or 4 days until it finally gets to where it's going, and then you say, okay, it's where I want it to be. Now I'm ready for the next trade. See, too often you guys are so itching to trade so much, you're not patient enough to wait for these conditions, and that's why you're losing trades. We have to wait for the right timing, and that's the whole point of this series. You got to be patient to improve your entries. Make sure your entries are golden and beautiful, and you'll have a better experience trading. You may not be trading every day. You may miss a trade here and there. If you miss it, you wait for the next one. You take a break from the market. Now, or you can trade smaller time frames with the same principles, but the smaller the time frame, the less the harder it is. All right, guys, that concludes lesson 1, or the first part of improving your entries and to be a better trader. Hope you enjoyed that.